You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tues from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that music means we're back. Yes, we're back. We're back to talk some options and all the fun that is contained therein. Yes, we're back for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network. I know you guys missed us on Monday. You're hitting us up. You're like, where's no show? Like, markets are closed. Nothing really to talk about on days like that. And everyone, all the co-hosts, and indeed myself, they have a much deserved, they have much earned rest. We got to give it to them when the fates allow. So we take those days off. But yes, we're back here, ready to rock and talk some options. Of course, you guys know how to get at us. The website or the app, best place is to go deep. Actually, the app is probably the best place to go super deep into the archives of the network, because we had to actually limit some of the stuff on the website just because there's so much shows. It was breaking the site. We're in the process of redesigning it. So we go about 100 episodes deep on the site. The app, it's got the full kit and caboodle. So if you want to go deep down into the dark archives, 11 years or so, we got you covered on the app. We got a lot of it on the website, but not all of it. And of course, you want to just subscribe, set it and forget it. iTunes, TuneIn, Stitcher, those are your places to get it. I like Pocket Cast, but to each their own. I do see Pocket Cast climbing up the rankings there these days in terms of our volume. So clearly others are starting to feel what Pocket Cast is putting out there. Or, of course, you can hit us up live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. So if you just can't wait, you got to get it in your ears immediately. That's how you do it. And make sure, however you listen, it's Thursday. It's mail block day. So hit us up. Questions, comments, insights, pearls of wisdom. We do enjoy hearing from you guys, most of you anyway, out there. 96.2% of you we enjoy hearing from. And of course, Rock Lobster doesn't like hearing from any of you, but he's a grump. So let's go see, speaking of which, let's see who we got on the show today. Let's spin the wheel. Oh, let's start as far away from the grump land, aka northern Maine, as we can. Let's go to a nice, happy place where no one is ever grumpy, because the garbage is picked up all the time. It's got a weather shield. It's a great place to live. It is St. Charles. And who would be in St. Charles but Uncle Mike Tues of St. Charles Wealth Management? What a apropos name, Uncle Mike. What are the odds that you would be working for St. Charles Wealth Management and you would find yourself living in St. Charles? What are the odds? How astronomical is it that would line up that way?
Well, actually, they're pretty high because it's my company, and so I I paid all the state fees to do it, and I live in St. Charles. And you give us such a great reputation with what we talk about online. Why wouldn't I want to do that? But Mark, I have something very exciting to announce too. This past weekend, I thought of you, and I got to do something. One of the few things that a man of St. Charles can possibly do that's more exciting than co-hosting the option block.
You had a Skippy Zero, didn't you?
Oh, way better than that.
Better?
I was at a graduation party of our old babysitter. I was at her graduation party, and Skippy's Euros was catering it. Her brother is works for Skippy's Euros, and he got them a huge deal, and I was Skippy Palooza over there. It was amazing.
Did you make me a little care package and send it to me? Nothing better than a freeze-dried Euro.
No, I ate everything that I could. I was being very selfish along those lines.
Man, I'm jealous now. I wish I hit that party up. That's clearly a family with some good taste over there on the culinary side. Catering with Skippy Zeros, how? I ask you, how indeed can you go wrong? This episode should be brought to you by Skippies. I need to get them to cut us a check or two over there. They get so much love on the show, and they have no idea unless they're tuning in, which they may be. You should have told them, Uncle Mike, while you're there. You said the guy works for him. You should have hit him up and said, by the way, we sent at least 8 people your way over the course of the last year or so. So cough up some dough. All right, of course, yeah. Who knows? Who's in the St. Charles neighborhood to stop by Skippies? I guess we'll find out. I know who isn't. And that is the aforementioned Rock Lobster. I'm sure he's taking all the umbrage up there in Maine, but it is the nice season up in Maine, so maybe he's a little happier. Let's tune in and see. Mr. Rock Lobster, how are things in the land of Maine, sir?
Peachy, warm, swimming in the water. Sun is shining. My dog is laying here just roasting in the window. Quite idyllic, actually. Quite idyllic.
Oh, quite idyllic. Listen to them. He sounds tranquil. He sounds happy. He sounds quite pleased with life, and so does his dog. So I guess things are well in the state of Maine. Not so much in the market, but we'll get to that because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show where we break down what the heck was going on in today's action. We've had a bit of a topsy-turvy week. We came back, people a little bit scared, concerned about some renewed tariff issues, saw some sell-offs, we saw some little bit of that being overdone and maybe reversing a bit yesterday, and today we're back on the tariff, the trade war train. Most of the major indices in the red. Depends on where you look, how far off you are. It seems like this stuff definitely tends to skew more large cap macro type names. So you're seeing S&P and Dow really taking it on the chin. S&P off about 0.6%, Dow off a full percent. Tech-heavy NASDAQ kind of bucking the trend a little bit, only off slightly, off about a 0.2% on the day over there. So kind of fluctuating back and forth there. So not the broad annihilation out in tech land that we saw in some other spots. Of course, all this red back on the screen means VIX creeping back up, or up about a half, 0.6 of a handle, right around 15.5 right now. Not looking too good, I don't think, for my crystal ball. But hey, I can't have bullseyes 2 weeks in a row. Mr. Rock Lobster, did your cohort did he tell you that I've gotten effectively 2 exact bullseyes 2 weeks in a row now? I know it's kind of scaring him. Did he mention that to you?
The funny thing is, he really only mentions when you're totally off the mark and not even in the ballpark. Somehow the exact bullseye William Tell call escapes his memory.
It's like scarily bullseye, like literally not even 0.01 off. It's kind of scary.
Well, you know what? That's very impressive. Tomorrow, though, I have a feeling, we're going to be more like 1.5 points from where we are right now. That's my feeling. Up or down, not really, don't know, but I feel like we're going to have a little bit more of a swing tomorrow.
Well, if it swings to the downside, I wouldn't mind it that much. It would line up with my prognostication a lot better, and also what else I got going on. So I wouldn't be too averse by either of those. But that said, outside of Mark admitting his failure at the crystal ball, what else is catching your eye, sir?
Oh my word! Well, how about this? How about the biggest sell-off in Italian bonds in 30 years? And well. Nobody has to look over here, or the EU basically saying you Italians can't vote how you want to because the ECB is bigger than you. I don't know when the people. That's a little. I think that's going to cause some problem. Maybe not short term, but. The faceless Borg of the ECB is, I don't think how well that's going to sit with, all the sovereign nations in Europe. I think they're, the whole Eurozone together thing, I guess they're either in or out, but I found that all very interesting. Also, the Italians are like, well, we just don't want to pay back all the money we owe. I like that. Like we've been kind of having a good time with this huge bureaucracy. Spain, Portugal, Greece, it's all good that those guys kind of resized and cut down their bureaucracies and, did some market order reforms, but that's not really going to work for us. We're just going to stop paying back the money we owe. So, of course, we could probably hear the same out of the U.S. here at any point in time, considering what the deficits here are going to be.
Isn't that how it works, though? You go to your bank and you say, I'm tired of paying this mortgage. I want to go out and have fun. And then they usually are pretty receptive to that argument, aren't they?
Yeah. They perk right up and go, sure. Yeah, you don't have to pay us. And they go, but we're going to throw you out of your house. And you're like, oh, but that's not fair. So I think I've always the fair concept is a bit of a head scratcher, I think. But what do we have? We have those are, I think, the big things. Besides that, tech, Twitter trying to get back to 1 or 2 year highs. Volatility moving up on what I would say is like a non-volatile day. I mean, the market just kind of, if anything, that's more just sort of kind of sadness and lack of direction. I think this is a day really like banks and stuff like that brought everything down because of interest rates maybe aren't going up, something like that. So also there's and I think the last thing it's, Deutsche Bank, the Fed saying, Deutsche Bank, you have problems. So Deutsche Bank, not a small player in the derivatives business. So, we have a little higher vol, the whole Italian bond thing. So basically, it's like the analogy I always use for volatility is the grenade goes off and the explosion's fast and the recovery usually is slower. It's trying to get the grenade put back together. So while we have recovered somewhat from that, what I would only say is a massive vol explosion this week. We were trading 12.5 and going nowhere fast on Friday and traded 18.5 on Wednesday, which is a pretty, on Tuesday, which is an enormous move in volatility. Like everybody's like, what do we do? But, SPX is down 40 handles, so your vol's got to go up. So we kind of have, it feels like we have vol is higher, waiting for something to happen. I'm not sure if it's the Trump tariffs, NAFTA, China, whatever. But it feels like they're waiting for a resolution this weekend, and that could take us, up or down 1% without too much trouble, relatively easily. It feels like that's how it's setting up to me.
Yeah, I know you're a big fan of all things Italian government and their debt, so you just love bringing up anything Italian. You used to love Draghi; that was your favorite guy to beat on here on the show. So, you've always had a bit of a flair for all things Italian government and finance ministry. So there you go. You get a chance to vent a little bit of that here over your espresso today on the old option block, Mr. Uncle Mike. While you're busy just dreaming away the great happy memories formed from so many delicious Skippy Zeros, what was catching your eye in today's activity, sir?
No, by all means, it was euros, it was beef, it was chicken euros. It was a lovely time to say the least. With that, I think that this weekend is going to be an interesting weekend, and actually it could be starting any time now, quite honestly, with what's going on with Italy and what deals could be struck. I think that's the main news of what's happening right now in the marketplace. That's the main thing that I'm seeing. From a technical standpoint of this market, we have been in a range, and I'm just looking at SPY because that's what I typically follow, of around between 270 and 274. We violated that range on Tuesday for a little bit, but we pretty much came right back to it on Wednesday. So we did have a little bit of a violation of that range, and we started this on, I believe it was May 10th. So for pretty much the last 3 weeks, we have been caught in this range, and at some stage, we'll break out of it, I'm sure. And in theory, I suppose we could stay within this range forever. You never know. But I do see us coming out of this range, because 3 weeks is an awfully long time for us to be in a 40-point range on the S&P. So with that, we could continue to stay the same, but I really am not seeing it for too much longer. And I think that since we're closer to the bottom of the range right now, if the deal that is struck, or if we have good news out of Europe, or if something happens along the lines of, say, the tariffs are supposed to happen at midnight tonight with a lot of our allies. If all of a sudden we cut a last-minute deal on tariffs and we're not going to have them, or they're going to be greatly reduced, or whatever the case may be, then this could be something that propels this market upward. If we get bad news, though, it's something that could propel the market downward. So right now, this is one where I think it's good to be either long premium or long spreads. If you're a bull such as myself in general, I don't know if I would necessarily want to be much of a premium seller at this point until we get a little bit more clarity in early next week. Now, if we drop 50 points in the early part of next week, then by gosh, I'm selling some put spreads. But for the time being, I think that I shouldn't say by gosh, because by gosh means that you're pretty serious where I come from, by gosh. But most likely, I'll be looking to sell some put spreads. But for the time being, I think you just need to sit on some calls and wait this out, and then either tomorrow or Monday start to, as a very, very wise man once said, do stuff.
By gosh, well, that means that is serious for you, sir. When you're looking to sell some put spreads, sell some put spreads. By gosh, that's when you're really deep into it. The BBI is going to go through the roof because you're not budging. It's time to sell some puts, and it's also time, listeners. Speaking of puts, it's time to keep on rolling. Let's see how all this craziness with Tesla affected our mystery put friends and a bunch of other things. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down, what was going on the weirder side of the options biz, the side you probably don't hear about too often because most people are afraid to go there. Not us, though. We'll head down those dark alleys to find the shady business going on in the world of options. Speaking of shady, it doesn't get much shadier or crazier or weirder than the weird, funky. A lot of people call them the mystery puts. We call them catastrophe puts, but to each their own out there in Tesla these days. Of course, Tesla had a bit of a brouhaha over the past week or two over there with their Model 3 and Consumer Reports coming out and saying, this thing has terrible stopping distance. We're not going to rate it. It's not safe. They freaked out. They actually were able to do an over-the-air software update to improve the braking distance, which is kind of a crazy thing when you think about it, but still interesting enough to make the recommendation come back. All that a long way around to saying the market not liking what they're seeing again today. Tesla not just following the market down, exceeding it quite a bit, off about 7 handles, right around a little bit shy of 285, 244 and 3/4 or so to close out the session there. Let's go to our old friend, the mystery puts, the Jan 2019 50s. Actually not quite as active today as you usually see a day when the stock's off 7, 8, 9 handles. You usually see these things lighting it up. Did decent paper, quite about, not a ton though, about nearly 300, 270, about 56,000 and change open. These things are right now right around 109 at 115. They were just trading $1.50 not too long ago. Before that, they got up to about nearly $3. And before that, again, they were back down to about 50, 60 cents. So it's been quite a ride for these bad boys. Worth noting, though, maybe a 1x2 going up out here. The 35 and 20 puts, 315 of the 35 puts and 718 of the 20 puts. So not quite exactly 1x2, but interesting numbers nonetheless to perhaps some funky ratios going on out there. So I guess 50 strike, that could be a little bit maybe too rich for your blood, a little bit too optimistic. You want to go down to the 35s and the 20s, well, those are lighting it up. Out here in Jan 2020, the 50 puts were doing about 270 as well. So pretty much similar paper out there, about 16.5 open out there on these puts. So again, a lot of OI. Also worth knowing the 20 puts active out here as well. So that 20 strike may be becoming someday going to be the new 50, going to replace this strike with about 400 and change going up on that strike. Those things trading about $1.30 out there as well. So certainly no shortage of ways for people out there to express their bearish sentiment out here in Tesla, and doing so today on a wide variety of far out of the money put strikes yet again, though perhaps not quite as much paper as you might assume out here. Speaking of expressing bearish sentiment, Mr. Rock Lobster, you kind of alluded to it earlier. You know, we talked about him on the last show. Deutsche Bank not exactly getting a lot of love. That they had big layoffs, I believe, about a week ago when we were talking on the show last time. Now the Fed kind of jumping in. They're putting they got some concerns, shall we say, on old DB. The FDIC coming out and putting Deutsche Bank on this list of problem banks. What that means is that that's a bank with financial, managerial, operational weaknesses that endanger their financial viability. You know, effectively the thing you go to a bank for. You want it to be financially viable. So that, of course, not exactly bullish for DB. The stock off about 4%, closing a little bit north of 11. It got down to about 10.57 or so off about another 50-odd cents before, I guess, rebounding off those terrible dire lows. Settling off a little bit north of $11 today. So name it does about 17,000 contracts a day. Today doing about 140,000. So a little bit more. Surprisingly equidistant almost puts to calls. Only about 1.2 to 1 puts over calls. Nonetheless, though, to say it was not a put palooza out there would be perhaps misleading. It was indeed some action out there on the puts in particular. There was put action across the board. You pick a month, you pick a strike. They were lighting it up. The June expiring on the 8th, 10 puts in about 4,500. Those bad boys, the 15th doing about, on 10 puts in about 2,500. But what caught our eye out here was in August, a little bit longer term, scrolling on past the June and the July, even though July 10 puts doing about 5,700 contracts out here. But what caught our eye in terms of size were the AUG 7 and the AUG 10 puts doing quite a bit. When we started looking at them, we saw about the AUG 10 puts doing about 7,800, lifting the offer for 55 cents as the day went on. Total of about 9,000 and change going up on that strike, and about all opening there, only about 1,100 open there. Also saw a block of 10,000 of the AUG 7 puts going up for 14 cents, also lifting offers there. Open interest about a couple hundred, so all opening there as well. Worth noting the 9s splitting the difference, about 4,000 going up there today as well. So AUG puts were where the lion's share of the put action was. Total of 11,000 and change going up on those AUG 7 puts, by the way. So a lot of puts lighting it up out here, Mr. Rock Lobster. It's hard not to understand what this sentiment is feeling here. Let's look back anyway. We did it last week. Let's look back again here at the chart of good old DB. About a year ago, they're about $17.50. So the heady days of yesteryear, 17.5 seems so rich, so luxurious now. Got up to about 19.5 and over 20 in December, and that was kind of pretty much the peak for them. They got barely over 20. They had earnings back in end of January, early February, and we all know what happened in early February. Things started selling off, and DB was alongside them, selling off pretty aggressively right now to pretty much where we are right now, from about 20 right on down to about 11, so almost a 50% sell-off out here. Mr. Rock Lobster, it's hard not to argue against these puts, even though maybe the argument could have been you could have had some on a little bit earlier. Any thoughts here about these puts in Deutsche Bank, and also any of your hardcores in the pitch chat slinging any DB these days?
We looked at, I think in our last one, we did the Mark and Andrew show, I think last week. We do once a week at Option Pit. We looked at a Deutsche Bank put back spread.
Is it actually called the Mark and Andrew show?
It's the Mark and Andrew show on Option Pit. It's
to,
like an hour. It's
we need to work on your branding.
Free ranging Mark and Andrew stuff. It's quite entertaining sometimes.
The Mark and Andrew show.
Yep.
Interesting.
Yep, we do, and we come up with some pretty good trade ideas. You know, we argue about trades like, no way, that's not a good. Oh, okay, that one's good, and then we usually end up with everything we looked at this week or last week and this week. Usually we find good things. So, all vol-based stuff. This one where we're looking for, the vol's blowing up and this thing's going to get ugly before it gets better. So far, that's what's going on. As far as this trade goes, I would have to say it almost feels more like a stupid or, a rollout or something, but it just feels like they want more puts. If I look at this right, so they're buying puts, kind of in both, and they just want more. That's the only thing I can think of.
Speaking of wanting more, perhaps the opposite of that in this case, wanting less. If you recall, about a week ago, Mr. Rock Lobster, also in DB, the first time they kind of came on our radar a week ago and everything was selling off, they announced the initial round of layoffs. We were specking on what was going on with some upside calls. In particular, there were the June calls expiring on the 1st. So coming up there, the 12-half calls, someone put up about 20,000. Looks like they were blasting them out for about 9 cents. And what seemed interesting about that was, first off, when you dig in, you see the OI was about 20,000. And even more interesting, it seemed like they had traded pretty much 44 cents. Someone had gobbled up 20,000 of them for 44 cents literally the day before. And so it was, if it was indeed a turnaround, it was a pretty dramatic about face. It kind of rang to us a little bit weird that someone would dive in for so much size paper and be so terribly wrong, and they ended up giving up the ghost right away. So they clearly thought they had a tip, and then the tip turned out to be in the other direction. But either way, that is exactly what happened, Mr. Rock Lobster, because the OI reveals that pretty much they came in for 20,000, dumped them the next day for 9 cents, and they were gone. So they lost a nice 35 cents 20,000 times, Mr. Rock Lobster. So that one still rings weird to me, but I can't remember the last time we saw that much size, let alone that quick of a capitulation, sir, on the odd block.
I would say unless they were really savvy and they shorted a bunch of stock against them, I could see how they wanted to set up maybe a short-term synthetic to kind of cover themselves, synthetic put. But I don't recall seeing the block of stock going up with the calls. So I think it's kind of, it's a big ouchie unless they got 2 million shares off. I think they ran into a big bump in the road with that.
You think this guy's that savvy? Comes in, he's going to do 20,000 calls to get off 2 million shares, just blasting away, and because he knows he's that certain in his tip. But just in case, he's going to spend a few $100,000 or more on some calls. You think this guy's that savvy? I'm going to lean the other way, that he just kind of thought he had something, and turns out he was riding the elephant the wrong way.
He was riding the elephant, hugely backwards. So, and this is what's very strange about the Deutsche Bank thing right now. So right now, banks have mostly been recapitalizing. XLF is, close to multi-year highs, right? The KRE after some of that short-term bank reform. So for the most part, banks are looking, pretty good relative to how they were in 2008, capital reserve. And then, is it because Deutsche Bank just is long a bunch of Italian bonds? I'm not. It's one of those things where there's like a little bit of fire and there's a lot of smoke, but you're not just quite sure yet. I don't like. I'm not super happy with the way the Fed is kind of saying, well, this is a problem, but we don't want you all to worry about it because it's cool. Now, I have a hard time believing the German government would not bail out Deutsche Bank if they needed to, mostly because Deutsche Bank just buys sovereign bonds from the ECB. So, it's kind of one of those things where the ECB makes all these banks buy this junk, and then you have a massive blow up and you've got problems. So anyway, I think it's kind of the thing that's underpinning the volatility, even though it doesn't look major as of yet. But it's hard to go from a 12 VIX to what we just did. The market is back to where it was cash wise. SPX is back to where it was, and vol is still 2.5 points higher. So that, your spidey sense is like something's not quite right with how things are going. So, and my big joke is, I own too much upside in VIX, and SPY puts for the market to crash. So I don't think that's going to happen, but it has the whiff of strange right now. I got to say that. Just VIX should be in a different place, and it's not. And usually that means that, people are buying options looking for a move.
That they are indeed, and certainly doing that at least for a short while there in Deutsche Bank as well. Let's move on to Exelon, ticker symbol EXC. This is, of course, the energy company a lot of you are probably familiar with. Closing today, $41.39, up about not even 0.5%, not even 20 cents on the day. So kind of a quiet day, but bucking the trend out there. So ballyhoo for them. This is the name that does about 3,000 contracts a day. Doing a little bit more than 3x that. Closing in on 10,000, about 9,800 or so. 14-1 calls over puts. That's where our eye of Sauron was drawn. Of that, let's see, 9,000 and change in the calls. Pretty much 7,200 of it coming in this one trade. Someone, I guess, deciding to blast away on the July 43s, coming in, putting up 7,200 of them, or I should say 7,200 others filtering in later, for 30 cents, blasting away right on the bid. Open interest only 700 and change, so clearly opening paper. These are near-term, near out-of-the-money calls, so it has all the hallmarks of a nice little overwrite, getting 30-odd cents to hold these bad boys for 50 days, so not quite 2 months out here. Let's look at the chart and see how that works out from a yield perspective and everything else. We'll look back here. About a year ago, Exelon was trading about 36 and change. Then they went on a bit of a tear. They got as high as about 42, almost 43 back in November of last year. So perhaps another reason why our friend is deciding on that 43 strike here. He looked at the chart and decided that's his upper band. If it gets up there, he doesn't mind perhaps dumping out some stock. Then it traded back lower again, back down to 36. So it's kind of been in this 36 to 42 range, rallying again right now. So it's kind of been in this kind of nice little band, 36 on the downside, 42 on the upside for the better part of the last year. We're not huge technicians here on the show, but maybe not that hard to see where our friend here decided on drawing his line in the upside sand here. Take that, Mr. Rock Lobster. Upside sand. What do you think about that? What do you think about that? And what do you think about these upside calls getting 30-odd cents, actually 30 cents exactly, for 50 days of work? And at the stock rallies, he's out at 43. What's your take, sir?
I'm still, I don't know quite what to do. I'm looking at in Exelon, no 35 calls. Am I looking at something totally nuts?
I'm sorry. These are July 43 calls in Exelon.
July 43 calls. Okay.
You go to your option chain for EXC, you scroll down to July, and then you look at the left side, which is the calls. And you should see it right there. There you go.
I got that now. Those are not exactly what I was seeing in the notes. So I'm going to have to pretend. My word. You're looking at the volume there.
You're looking at the wrong thing. Hence look at the right thing.
I'm totally looking at the wrong thing.
That's what I get for giving you info ahead of time. It just confuses you.
You know what? It's like the crosswalks, when everybody says it's safe to cross the road, so people just walk in the street and get hit by a car anyway without looking both ways. It's kind of what that's like.
That's pretty much what that is, sir.
Now that my brain is back in, wouldn't you say this is kind of the vanilla right calls in a power company play for
it has that
1% yield?
It. Yes.
Yeah. So now that my brain is better connected to reality, I would say this is all they want there. That's good spending for somebody. 30 cents, 7,000 times, $210,000, right? That's not bad.
That's a good day's work, sir, for the Mark and Andrew show over there. I know your rate gets up there. I'll let you look ahead to the next one because you already so graciously called it out for us. We're gonna wind down the odd block here with PAGS. This is PagSeguro Digital Ltd, ticker symbol PAGS, PAGS, closing today 33.27, off about 40 cents or about a little over 1%. This is a provider of fintech solutions, so hot, cool, buzzy type stuff. In particular, micro merchants in Brazil. So there you go. This is this is it's like an ADR here, or something along those. Brazilian company here at the very least. This is the name that does about 1,500 contracts a day. Today doing about 14,000, so almost 10x that. Pretty much 1-to-1 calls over puts, because we saw some interesting, if separated by time, paper out here in good old Pag. Started off the morning, as the Rock Lobster alluded to earlier, when he was looking at the wrong thing. The Nov 35 is lighting it up about 4,000 times, a little bit more, about 4,200 total. Paper coming in and pretty much gobbling them up for 560, and just shows you how little these things trade. The market was 380 at 590 when they came in on these. So this is kind of what we were talking about before, but some of the illusion of liquidity in the options realm. When you get beyond the Apples, Facebook, Spies, and VIXs of the world, you get 280 or 380 at 590. Now, obviously, it didn't trade there. There was a market inside that, and this guy got it. He got down to 565 or 562 in his case, but still. That's what we're talking about. We're talking about these liquidity issues on these less liquid names out here. I mean, this is the name that does 1,500 contracts a day, so it's not the smallest name in the world, but certainly not the biggest either. But interesting enough, that alone would be interesting. Someone coming in, gobbling up some upside. Okay, they got some long-term upside bias here. But then it looks like, about 3 hours later. And what are the chances, Mr. Rock Lobster, that it's not the same guy, that two people decided to come in today on separate occasions and blast out some similar, directionally at least, leaning trades, not from a volatility perspective. We saw someone coming in, looks like they're coming in to blast out the June 30 puts 6,200 times, doing that for 26 cents. So pretty much right off the offer. These were a little bit tighter, only 25 cents at 50 there. So maybe someone deciding, I bought all these calls for 562. Those are kind of pricey. Maybe I want to offset some of that. So I will do it on a ratio by turning around and blasting out 6,353 total of the June 30 puts. So those, again, $3 out of the money and change. But 1,500 contracts open there, about 200 open on the Nov calls. So all opening paper across the board. So the size is interesting, but I think the timing is also interesting, Mr. Rock Lobster. It could have been someone saw those contracts and they were inspired to come look at some Pags. Guys are getting shows all the time. And so they're getting a show. I got a show on Pags, and they see that, but they don't like the calls, but they decide they like the puts. That's certainly a possibility. The trade did go up 3 hours later. But still, one of those interesting ones. It kind of makes you scratch your head and say, looking at a chart, speaking of which, looking at a chart, and this thing doesn't go back too far. It only goes back to January 24th. Of this year. That's as far back as we got to look here at Pags when it opened up right around 28 and got as high as 39 back in early April of this year. So it's kind of had a nice 10 handle or so range, kind of in the middle of that right now. Hence why someone might be want to load up on these calls and then deciding to finance such a small portion of it, Mr. Rock Lobster, with these puts. What are your thoughts on the trades individually? The fact that perhaps they went up so far apart, 3 hours and change. Are you feeling that they're related? It does feel that way, but it's possible they're not. And then thirdly, what are your thoughts on financing your $5 and change calls with some 26-cent puts?
Well, it certainly makes it a much riskier trade.
Yeah. Yes, it does, doesn't it?
So you say, okay, well, I'm going to plunk down $5 for the calls, which, okay, I don't want to buy the stock. And then I'm going to just generate some income for myself by selling some of these puts for 20 cents. Effectively making the position like stock. So I guess they just wanted to make sure they take delivery at 30. That's the only thing I could see. It feels like a put that, it's June 15. It's probably an out of a touch put, but it's not one I think I'd really want to sell in this particular stock. Quite a risky trade overall, I think.
This guy's decided he's
scratching.
He's going to sling, $5 and change 4,000 times. Then I'm going to go harvest some 26. It's not enough risk. What would you, as a risk manager, say if Crazy Meatball decided to go that route?
I would say, Crazy Meatball, why the hell are you doing that? Because you're adding a lot of risk without actually getting a whole lot of reward for it. So that's the worst part.
All those calls only cost him like $5. So there you go. He saved a ton.
Yeah, he's saving himself, a little less than 10% on the value. I mean, I would. This is an odd one for me because those 33 puts look kind of like line in the sand style puts. And the worst thing is, what do they do? Sell them for 30 cents? They sold them for 26 cents and they go out bid 35. So, of course, that's the liquidity providers just making an extra 9 cents for their trouble today.
Yeah, they had to adjust those sheets
just to give the person a little bit of a jab into the close. They're like, "Oh, we'll pay 35 from now." So,
that's lovely. Yeah, we know how that
I
feels.
remember those days. Okay, you're going to sell me 2,000 of these? Well, all right. I'm going to mark them up a quarter. Screw you.
In your face. You.
That's right. And I'll buy more.
Anyone can mark those sheets, right?
Right. And then people will come in at the end of the day and sell them.
Yeah.
Go,
your bid there?
Okay,
here you go. You're going to buy 10,000 more tomorrow. Enjoy it. So, yes, there is a downside, a dark side. To moving those sheets. Again, we should emphasize we are assuming this paper is connected, even though it's many hours apart. Just our own, experience having us go that way. It's possible they're not. One could be inspired, the other could be completely unrelated. And the name only does about 1,500 contracts a day. Probably not, but you never know. Still, interesting paper. Either way you carve it up. Speaking of interesting, see what you guys got on your collective brains. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is the time when you guys ask us questions. Occasionally, we turn the spotlight back on you guys. Last week, we asked you guys kind of a fun one, going into the holiday weekend. Everyone wants to know where VIX going to close. We said, let's push it a little bit. Let's flip the script and ask you, where is VIX actually going to open on Tuesday morning? And about not quite half, 39, almost 40% of you saying right in the range that it was, going out about 12 to 14. Not a crazy guess at all. 30% saying a little bit higher, 14 to 16, and then the rest kind of scattered. And it actually opened at 14.39 on Tuesday. So the 30% who said higher actually get the winner, and they actually got as high as 18.78 intraday. So it didn't open there, but those of you who leaned much higher and were looking kind of crazy on Friday didn't seem as crazy by middle of the day on Tuesday. So actually a fun day where pretty much all of our ranges, except for I think the 10.5 to 12 range, were reflected in pretty much one day. So that just shows how fun VIX can be. Fast forward into this week. You guys are loving this one. You're already firing away. We just posted this before the show. Here, we asked you guys, we'll keep it with our volatility theme to round out the week here. So quite simply, which product do you think has the highest, 30-day implied volatility? And no cheating, no going to checking your broker or asking anybody there. Just what does your gut tell you? Which of these products is the most volatile? Is it Tesla? We always talk Tesla. Is it the VIX itself? Now remember, not this volatility of VIX. This is not S&P volatility. This is volatility of VIX. So is VIX more volatile than Tesla? Or is it Bitcoin? Or is it the Russell 2000 to mix it up on the old index side? A lot of you guys are voting hot and heavy already. Some clear leaders pulling apart. I shan't vote because I know the answer, but let's go around to Uncle Mike, sir. What are you feeling? And then more importantly, what do you think our audience is choosing? They got Tesla, they got VIX, they got Bitcoin, or the Russell 2000?
I will say the audience is feeling Tesla. And in terms of what it is, well, what the heck? Let's go with Bitcoin.
Interesting. Mr. Rock Lobster, what say you, sir?
It's somewhere between VIX and Bitcoin. You know why? Because I really don't look at the volatility of Bitcoin. So let's see. Let me do a quick 1% a day for Bitcoin. What is it? $9,500. Is it moving? It's got to move at least $100 a day, right? So it's 10,000. 1%, 16. I don't think it's a 100 vol number. Maybe it's a 55 vol number. If it moves $400 or $500, so I'm gonna still go with VIX. Going with VIX.
Interesting. I can't comment on your answers, whether they're right or wrong in terms of what you're saying for Bitcoin vol, because I do know the answer there. We talk about that on TWIFO pretty much every week, so the number is interesting. But I shan't say it yet. We'll reveal the answers forthwith. Right now, it's a bit of a hot and heavy battle between Tesla. You guys love your Tesla, 32%, and 37% leading right now with Bitcoin. VIX 16%, and the Russell 2000 only 15%. So a laggard there. Interesting stuff. But yeah, this is an interesting one. Clearly, you guys are into it, and you like your vol questions. Speaking of questions, we got a comment here from Charlie Tunson. He says, "I'd like to add my vote for after-hours options trading." Maybe this is from our poll from a couple weeks ago. We have talked about it before since then, too. It's ridiculous that the underlyings keep trading while the derivatives of those products are locked in an artificial deep freeze. I like that. I don't care if it's entirely illiquid or just a resting order book. Some liquidity is better than none when everything is melting down. Yeah, I feel you, Charlie. A lot of people do. A lot of people, particularly on the retail side, particularly around earnings season, really want something like that to exist. And I see the arguments why not. In fact, if you want to listen to some interesting arguments why and why not, go listen to all my sit-downs I did at the OIC conference. There's more of those coming out. We did a ton of them. We talked to all the heads of the exchanges and brokers, vendors, et cetera, and asked them that specific question. What do they think about after hours? Is it coming? If so, what form will it take? And there still does seem to be a lot of hesitancy on that, and if it does come, maybe in some sort of limited pilot around earnings. But I do kind of tend to lean with you, Charlie, that some liquidity is better than none. But yeah, we're seeing liquidity issues intraday, so I think people are probably rightfully focusing on those first. But maybe someday we'll see the after hours. Again, check out my interviews. There'll be some interesting commentary on that. Uncle Mike or Rock Lobster, anything you want to add on the endless debate that is after hours?
If it would work, I'd love to see it, but intraday, I think it would just be very illiquid. So I guess if you're going by the argument a little bit of liquidity is better than none, let's give it a shot. But I really think there's going to be some mighty wide bid-ask spreads, by gosh.
Yeah, if you see that other name, we were just talking, what was it, PAGS, 290 at 560, whatever that one was, intraday. Imagine what we're going to see, even in some liquid names like Apple in the after hours. And we already have not many market makers out there to play ball and during intraday, let alone coming in the after hours and manning those and keeping them deep in liquid. But maybe the resting order book, maybe they're matching up some bids and offers. I think there are worse things. You want to get out of your Google calls. It's after earnings. Things are rallying. You want to take advantage of that big pop. I don't hold it against you. I see what you're after there. Let's see. Mads Mecklin. I like that name. He wants to know quite simply, why don't you guys talk about Asian options? Well, there's a couple of real. Well, I guess it kind of depends what you mean by Asian options. If you mean options that trade in Asia, there's not a ton of them. There are some that trade a ton. Everyone talks about the Kospi out of Korea. Volume-wise, that's kind of the number one thing coming out of Asia, even though it's a very small value contract. So you got to do a ton to really get anything done. Hence the enormous, ridiculous numbers you see coming out for the Kospi. But it's kind of skewed because the contract is kind of negligible. So they have to do a ton. So that's why those numbers are always high. We see things like the Nikkei. We see some of the commodity things do all right. I know rebar futures, I think they have options of those over the Shanghai or Dalian, one of those exchanges, do a ton of paper all year round. So there are pockets of interest. But there isn't a ton, which is why everyone got excited when China was talking about really listing, equity and index options, really kind of embracing them for the first time a couple of years ago. And then we saw a big pushback from the Chinese government, freaking out that they thought everyone was going to come in and really use them as a gambling, a speculative tool. So they started doing some crazy things like talking about putting on multipliers of like 10,000 for even your standard equity option. So obviously no one but big institutions could afford to trade them. So it seemed kind of draconian to me. I'm not an expert on the culture of mainland China. So I did talk to some people who active over there, and actually we were working out with a brokerage firm at the time who had a decent number of, probably the only one in the country that had a lot of clients from China, and they kind of concurred with that. They said there is a very, very strong gambling culture in China, and they said, I asked them what kind of paper they were seeing from their Chinese retail clientele, and they said it was almost kind of the polar opposite of what you see with a lot of American clientele, where a lot of them are harvesting premium and selling puts and things. These guys the Chinese clients were pretty much swinging for the fences, buying all the teeny calls they could all the time. So maybe there was some reason why the government over there was skittish, but that kind of put the brakes on things. Seems like things are opening up. But that's one of the reasons why we don't talk about Asian. If you're talking about the other kind, the actually Asian style option, well, there's even fewer of those. No one really trades those outside of some people in like the commodity space and people over there. In fact, I don't even think they were created by, I think they were just the guys who were living in Asia when they created them, hence the name Asian, but I don't think they really have much to do with Asia outside of that. And what that is effectively just like instead of having a strike set at the outset, you buy a par call. It's kind of the strike is determined by kind of the average value of the underlying over whatever period it is, a month, a week, a day. So apparently there was some concern about manipulation around settlement. Oh, who could be concerned about such a thing? And so they created these average value contracts to kind of push back against that. Again, perhaps those are usually for markets that are a little less mature. We don't have much of a need for those. It's outside of some weird circumstances over here. Hence, that's why we don't talk about them. Most of the things we talk about are European and American. So I don't know which ones you're talking about, Mads. Take your pick. Mr. Rock Lobster, Mr. Uncle Mike, anything you want to add in on the wide, broad topic that is Asian options?
I wish I knew anything about Asian options. And I would add, I have no clue about them. I don't even know, is it a special contract? To be honest, I know nothing. The only thing I would say is I'm surprised that they allow gambling in this casino. I'm trying to think of what in the line in Casablanca. There's gambling in this establishment.
Amazing. Amazing.
And I know the Chinese are kind of famous for trying to massage their equity markets with allowing different kinds of trades and whatnot. So I would say that so yes, it probably would be interesting, but I don't even think they let you short anything. So that's what good is it going to be for us? Yeah,
there's a lot of basic reforms that have to take place over there first. Uncle Mike, I'm assuming you're not blasting out a lot of Asian-style options for the strategic night clientele. Easy for me to say.
I have to be honest, I have never traded an Asian option in my life.
I don't think any of us will. An Asian style. We might trade an option on an Asian company. That could certainly happen, but Asian style probably not. So there you go. No matter which one you're asking about, hopefully that covers your question. If you had a different one in mind, I don't know what the heck it would be. Hit us up. Let us know. Meanwhile, we got to keep on rolling. That one took up all the time. All the Asian options sucked all the air out of the room. We got to keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we talk about what we're watching for the rest of this week into the weekend. We got trade wars, we got other stuff looming, we got downgrades, we got upgrades, we got craziness. Mr. Uncle Mike, we'll start with you. What are you keeping an eye on, sir?
Just all the macro news that's going on that we talked about in the trading block. I think there's a lot of things that are happening, and we're at the lower end of a 3-week range right now in the S&P. So I could see things going either way. As per usual, my patented 50% guarantee, and we'll see where we come out with this. But this is a pretty important time. This is tomorrow and Monday are pretty important days with the market, in my opinion.
There you go, Mr. Rocklops. I believe you said you think the VIX it's got to move. It's going to go up or down, but it can't stay here. Is that what you're keeping an eye on, sir?
Yeah, I mean, the SPX is back where it was on Friday, and VIX is 3 points higher. All the futures are bid. The curve is a little flattish to backward. Like there's I would guess either by Friday or Monday, like Mike said, we get some sort of trade, there's some trade breakthrough or breakdown. And that's kind of, I think those are the stories. And it feels like the non-farm payroll number tomorrow was kind of an afterthought after the Fed said, well, we don't need to do too much, rate raising already. So it's already kind of been a big news week. So I'm kind of poised for something kind of moving in either direction. I just don't see us sticking around here right now.
Well, go somewhere because you can't stay here. That's because that music means we're done. Listeners, thank you for joining us. Sorry you had to wait a week for us to come back here on this show, but hopefully we kept you busy with the endless amount of content that's been hitting the network over the past couple of weeks. Spoiler alert, there's more coming. So more interviews still from OIC and others that I've done in the interim. More stuff coming from others. There was a CIO forum in town recently. We went down to that. We've got panels coming from that. All sorts of fun stuff. So you guys we'll keep you busy, if nothing else, here on the old network. But before we go, let's go back around the horn. Uncle Mike, we'll start with you. You are now in the aptly named St. Charles Wealth Management. If I were so inclined, if I wanted to go to St. Charles and have someone manage my copious wealth, where should I go? What should I do?
Oh, by all means, come out tonight. If you're listening live and happen to be in the Tri-City area or just want to drive out to St. Charles, wherever you are, I am doing the St. Charles Investment Club, with which I head up. We're doing a presentation on the simulated index concept. Stop on by 303 East Main Street, second floor, and be happy to have you.
And is there a St. Charles Wealth Management active on Twitter yet, sir? Or are we still waiting?
Twitter's going to be a while, but feel free to check out my website, stcharleswealth.com.
There you go. Hit the man up there, stcharleswealth.com. We'll have all of his events. And if you're listening and if you're in that area, in and around the proximity to a Skippy's, Gyros, and Lemonade, I encourage you to have a gyro, have a lemonade, and then swing by. Maybe Uncle Mac will pick it up for you. You never know. Head on over there and talk some simulated indexing. Good stuff. And Mr. Rock Lobster, once I'm done talking to simulated indexing, maybe I want to talk VXX, or maybe I want to talk how to find puts versus calls on the option chain. Where should I go? What should I do?
You could go look at our VXX Made Easy, our best-selling product yet so far, teaching people how to deal with VXX. NVIX Made Easy, and our Vol newsletter, our Breakout Bulletin, Marks, Put Wheel, all great sellers. People are happy because they're learning something, and they're learning how to do stuff.
And I'm looking forward to your upcoming webinar, Asian Options Made Easy.
Yes, exactly.
I want
as
to
soon
go
as
for
I
that.
figured out what an Asian option is, I will pontificate on it.
So now we can add to the growing list of things that stymie and stump the Rock Lobster. If you're paying attention to home listeners, it is any sort of vertical in a cash-settled index on expiration that just blows his mind. And now, and also finding puts and calls in a name like PAGS. And now
Yes.
The third thing is Asian option. So there we go. We got a growing list, sir.
It is. It's growing, and it's getting bigger by the minute. Growing exponentially.
There you go. Help him get that list down to manageable size. Listeners, head on over to optionpit.com. Throw the man an old subscribe in the old Vol newsletter if you are indeed so inclined. Pretty cool stuff, at least from what I hear, the scuttlebutt around town. If you want to talk about slinging some of this VIX or VXX or XIB, or maybe not that one anymore, but whatever it is that floats your boat out there, head on over optionpit.com and find it. Maybe forthcoming Asian options. We shall see. On behalf of the Rock Lobster and Uncle Mike of St. Charles Wealth Management, how nice does that sound? And indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in such great questions, voting in our polls, all the fun stuff you guys do. We love you. We'll see you back here next week for the option block, but tomorrow, Friday, for TWIFO and Vol View, so stay tuned and we'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/VOL The Options Insider or via questions@theoptionsinsider.com.